And of course, we always have a weekly treat with Kim Khan with the Catalyst Watch. Kim, what do you have for us this week?
Well, it was another big week on the macro front following this action-packed Fed week. We get the CPI numbers coming out. For October, it's a big number. It's one and two that the Fed's getting before their next and final meeting of the year. Not looking for a lot of big movement, although there's going to be probably headline numbers still north of 8%, core number only dipping slightly. So, I mean, anything below 8% and, might give the market some juice. Clearly, they weren't too happy with the hawkish tone that Fed Chief Powell had in his press conference. We were looking at we asked in our Twitter poll last week whether they thought this Fed pivot was actually for real. More than 70% said no, they're still hawkish, so they were pretty much right on the money as far as Powell was concerned. And we'll see if the new data has anything to shift that.
Hmm. And I understand that the Walt Disney Corporation, they're reporting earnings next week. I know something that I always look for whenever I think of Disney would be Disney Plus, but I know there's so much more. So what do you have on that front?
Yep, they'll be reporting their quarterly earnings after the Bell Tuesday, and Disney Plus will be a big part of it. They're going to be looking at numbers, and according to our media editor, Jason Aycock, it's going to be really interesting to see how this investment in new content drove subscriptions. A lot of new shows came out. Whether that's gaining the interest of people and actually signing up. It's coming ahead of two big moves for Disney Plus. They're going to be hiking prices and also adding an ad-supported tier. So they'll be looking for comments on that. Another big thing is just parks attendance. That really drove earnings last quarter. And they haven't really said anything about that, signs of that slowing up, even in the face of cost of living problems in the United States and 8% inflation. People are still, maybe have some savings or just still have some, pandemic stress to burn out at the new Star Wars ride. And so that should be a strong driver as earnings as well. And so that's what we're going to ask our viewers in our newest Twitter poll, is whether they simply think that Disney is a good stock for 2023.
Ah, yes. And you can find that poll at Wall Street Breakfast on Twitter. Make sure you follow us. Kim, thanks for joining me today. I will see you next time.
Thanks so much.
For more coverage, catch our daily one-page news summaries and podcasts on seekingalpha.com/WSB. I'll see you next time.